Pilgrim's Pride Corporation, AREC 408 Agriculture Finance, May 5th, 2023. Who is Pilgrim's Pride? Dating back to 1946, Pilgrim's was formed by Aubrey Pilgrim and Pat Johns that decided to partner up and purchase a feed store in Pittsburgh, Texas. This partnership soon after expanded when Lonnie Bo Pilgrim, Aubrey's brother, entered the partnership. Pilgrim's is an extremely large worldwide provider of quality food products and has its headquarters in Greeley, Colorado. Along with their Greeley headquarters locations, Pilgrim's has 39 production facilities, 27 prepared food facilities spread across 14 United States, the United Kingdom, Puerto Rico, Mexico, and Europe. Additionally, they support small family farms and are partnered with more than 4,900 family-owned farms for poultry and more than 6,300 family-owned farms for hogs and lambs. When looking at a company's finances, it can quickly become confusing and difficult to understand. One major aspect of interest would be the company's liquidity. First, it is important to understand what that exactly is. Liquidity refers to the company's ability to convert assets or securities into ready cash without affecting its market price, with cash itself being the most liquid asset of all. The reason that cash is considered to be the most liquid asset is because it is the quickest and easiest asset that can be directly turned into another asset. To address the state of the company's liquidity, both the current ratio as well as the quick ratio were sitting at 1.38 after 2021. These numbers are both down from the previous year, which was 1.50. Being the fact that the value is over 1, it shows the company is liquid and able to fulfill payment obligations without hindering normal operation. The key component to solvency that differentiates it from liquidity is that it handles long-term assets. This is the ratio of the total value of the company's assets compared to their total liability. Looking back to previous years, Pilgrim's debt to asset ratio would be considered low because it went from 0.66 in 2020 to 0.71 in 2021. Although this number is getting slightly closer to 1, it is still in the range that is considered favorable. And the lower the number is, the better. Activity refers to any activity the business engages in to make money. For the purpose of this, the activities we will focus on are in regards to asset turnover ratio. Asset turnover ratio, in layman's terms, is how well a company can utilize their assets to generate a positive income. Since this company is a grocery provider, their goal would be to keep their goods flowing out of the stores and into the customer's hands as fast as possible via their grocery stores and distribution centers. The higher the ratio is in this aspect, the more efficient the company is at utilizing their assets. Pilgrim's Pride's total asset turnover ratio is at 1.66, which is 0.04 higher than the previous year, and their fixed asset turnover ratio remained constant at 2.64 from 2020 to 2021. These are both good ratios that show positive efficiency. Since the ratio rose for their total asset turnover ratio, one can conclude that the number of sales grew more than the value of their total assets that they have. The goal for any business at the end of the day is to be successful and profitable. Profitability can be described as the measurement of income and expenses. When a company has more income revenue than expenses going out, they are said to be profitable. The major formulas used to distinguish if a company is profitable are gross profit margin ratio, net profit margin ratio, return on assets ratio, and return on investments ratio. With all the previous beneficial ratios described, it would be easy to conclude the company is very profitable. Looking directly at their gross profit margin, They are at 9.45%. This number shows how much the company is profiting from each dollar of goods sold. The higher the percentages, the more they make related to each dollar sold. Comparing the 2 years studied from this project, 2020 to 2021, Pilgrim's Pride was able to increase their gross profit margin. Being as large of a company as they are, I would expect their return ratios to be high, but in the big picture, they are a thriving business and not going bankrupt. When analyzing capital structure, it is beneficial to take into consideration all aspects of the company, from how liquid it may be, what kind of solvency it has, what the company's activity looks like, and their profitability. In 2021, Pilgrim's annual revenue was $14.777 billion. If this number is not impressive enough on its own, this annual revenue was a 22.21% increase from 2020. Looking further back, their annual revenue for 2020 was $12.092 billion, which was a 5.98% increase from 2019. What this means is that the company has a history of positive revenue that continues to grow every year. My recommendation would be that this company is financially healthy and has a strong history of being extremely profitable.